Welcome everyone to another 144 Analytics, where we go over how to use the Fibonacci retracements. Last time we left you with our last video, we were just right down here in these lows, and we were explaining what to look for after hitting 61.8. All of the markets hit major levels down there and what to look for. As far as what happened here, let's just go over this dealing with 61.8, and sometimes you're not sure how do you get involved in the market at these levels and why are we watching just those levels. Sometimes you're going to get at 61.8 a lot of headwind here or whatever. You close above it, get right back below it. So it's still, we could look for the 61.8 retracement the other way. Here again, above it or right at it, and then close below it, above it, right at it, above it, right at it, and then finally we get at 61.8 and more. Now this thing, as we said, we put this out back in well, actually it was in June, but the corn had hit 61.8 back in mid-May, and the target on 61.8 is 61.8 the other way. Now this was a nice clean bottom here, hit there exact, and then just took off. Now this is the thing to watch and to know what retracement you're reacting from, because 61 can put you into wider swings, and the target is 61.8 the other way. In this case here, we actually had one close above it, right back below it. In this case here, is this a reaction from it? Well, I mean, on this day here where it closed back below it, the risk becomes the previous day's high to say yes it is, and so we would be looking for 61.8 the other way. Well, we got that and a lot more. So what happened here at this 61.8 right through 23.38 and 61.8, there was never a play off of this like you had down here and or right here. It just took it out. So if your initial trade was to buy it at this level, and again, one of the best ways that I've seen people do this is to do it in threes, and that is to do something at the level, through the level a bit, and then wait for the confirmation back above the level to put on that third part. So you're not risking everything right at that one point. But everybody has their own pain thresholds as to what they can risk, and that is on you to decide. So here we've now taken out this low, and we can retrace back one right here. This is the tightest thing we can go with, and usually outweighs a high back here, even though it is higher because it is so direct and so powerful. And then the extreme is the contract high, and that's what we're going to look at. And right now 23% would fall right in line with this Fibonacci, or the Gann square, and that's what we like to kind of match up to say just how weak or how strong is the market. Now next we're going to go into the July beans, which now are done for the most part, but we'll go back to what our last video was about and how we made the spike low below 38%. 38% always telling you that by holding it, the trend continues and that it should go make new highs or lows depending on that direction. Now you can see here slight hesitation, not really, even at 38% the other way, 61.8 nothing, 78.6 trade above it, back below it. Could we move down from here? Yeah, absolutely. Trade above it, back below it. Now here's what we guided our premium members with, is that this was 78.6%, so it could go 78.6 the other way, but we said holding 38% in this area of the major Gann square, and 38% should send this to new highs. Now obviously it went to the new highs and completed this 38% of new highs, new contract highs, and also just this leg, it held 38%. Now the key is just that what levels are they holding and which ones are not. And if it's holding, following the 144 rules, you should have targets on the upside. And we always watch every level or all the retracements at every given time on every move just to see exactly what it's reacting to or not. But never lose sight of that bigger picture of what it's saying, because sometimes you'll get in front of some of these markets when yet the bigger picture is saying it still has more to go or should go on the upside. Now just here in the SEP beans, we just hit, just for something to look for here going forward, is that we hit 78.6. This was our target. We had gone down here. We made this our swing point, the 1288, which was the Gann square and 38% of this move. Now it did have a close below it, didn't have a second lower low out below it, but you know, then we got back above it. It was our swing point. Granted, this was a report in here that sent this market so much sharply higher, but we knew the potential for this was new highs, and we gave our readers to look for this 1404 area or 02, and that's exactly what we hit. Now 78.6, what are we looking for? 78.6 the other way. Doesn't mean it's going to go straight there. We're going to watch all the levels here and above. Again, you want to know all those levels, please become a subscriber, because we give those out in every one of our updates. Now we're going to go here to the DEES oil and just want to go through this a little bit. You can see here the market went 61.8 again, a trade well above it, then closed right below it again. Same thing here, but yet the reaction was to go 61.8 the other way of this high and this low, the extremes of those moves. So then we take this low, retrace it back up to this high, and 61 brought you 61.8% again a spike up into it, never closed above it, and then the market goes down. Now here's how, when we watch, we say we watch all the levels. I'll just show you something right here. This was a contract high, going back to that, 23%. Well, you can watch our videos on 23% and how that's a very weak market and or strong, depending on which way it's going and holding. And then this is your secondary most important high. So now if we come down, well, let's just say we take it from there and we go here, we can see the 23 is all the way up at this level here. But if we're watching all of these, the two highs, we can see here 23% back to here, which makes it even weaker because it's only going back to the less of a high. And in this case, that's where the sharpest move down came to, right into 61.8. Now, 61.8, the longer term was our target on the upside, going all the way back here. That's what we just hit. But again, watching these two highs that we have, 61.8 of this leg down was right here. So yes, we were looking for 61.8 the other way, but we watch everything, and we had, our subscribers knew that if it held this area, it should go on, and our longer term target of the 61.90. Now again, a spike down below it, back above it, never closed under it. Our last video also dealt with a lot of that and how to deal with it. And then here we are now, 61.8 on the DEES oil. And yes, our target is 61.8 the other way. Doesn't mean it's going straight there. There's going to be lots of wiggles and movement back and forth, and for what to look for up above. And even before we get to that longer term downside target, we'd love for you to become a premium member where you'll get all of this well in advance. But we've given you a couple things to watch for right here, and we'll see what happens. We'll follow up with this in another update. If you like what we're doing, please subscribe to our YouTube channel and give us a thumbs up. And as we said, we'd love to see you become a premium member. So until our next video, good luck.